Hi, Michael Yardney here, and to ensure that you make the most out of our changing property markets, as the markets that were booming are now replaced by a period of slower price growth, I'd like to share with you some important lessons that I've learned from previous property cycles. Now, probably the most important lesson we can all learn is never to get too carried away when the market's booming, or too disenchanted during property slumps. You see, letting our emotions drive our investments is a surefire way to disaster. Now, I want to look at 5 big lessons from previous property cycles, but before I do, I want to explain to you that I've recently produced 2 great video programs, one talking about how to build your wealth through property investment, and this is a 2 DVD set with 4 hours, and it goes through my ideas, my lessons that I've learned, plus my strategies in this new property market, plus a lot about economics and finance with property finance expert Rolf Schaefer. And there's also one you can get together with this as a double pack about the millionaire mindset. I'll explain more about it at the end, but you can get this just by clicking at the link at the end. Anyway, let's get on with the lessons that I've learned from previous property cycles. Lesson number 1. Booms don't last forever. You see, during a boom, everyone's optimistic and expects the good times to last forever. Just like we lose our confidence during a downturn. But our property markets behave cyclically, and each boom sets us up for the next downturn, just as each downturn paves the way for the next boom. Look, let's face it, while the news is much less positive today, we know that over the next few years, the flatter property conditions will be followed by another property boom, which will, I guess, in turn be followed by another property downturn. And we also know that over the next decade, we're going to have another recession. Look, I don't know exactly when it's going to be, but we have one every 7 to 10 years. And we're probably most likely going to have another big depression one day. We will. So the lesson from all this is get prepared for the next phase of the property cycle. During the last cycle, most investors didn't really have their downsides covered or their upsides maximised. Lesson number 2. Beware of the doomsayers. Now look, for as long as I've invested, and that's been over 37 years now, I remember hearing people with excuses why property prices are going to stop rising. Or even worse, why property values are going to plummet. However, in that time, well-located properties have doubled in value every 8 to 10 years. If they're well-located good properties, they actually double even quicker than that. But you see, fear is a very powerful emotion, and one that the media uses to grab our attention. Sadly, some people miss out on the opportunity to develop their own financial independence because they listen to the messages of those who want to deflate the financial dreams of their fellow Australians. Lesson number 3, follow a system. Smart investors follow a system to take the emotion out of their decisions and ensure they don't speculate. Now look, I know this may be boring, but it's profitable. Let's be honest, almost anyone can make money during a property boom because the market covers up most of our mistakes. But many investors without a system found themselves in financial trouble when the market turned last time. I remember Warren Buffett said it succinctly. He said, you'll only find out those who are swimming naked when the tide goes out. Because of course a rising tide raises all ships, doesn't it? In other words, what he was saying was if you don't follow a system that works in all market conditions, you're going to get caught naked when the market changes. Now, if you prefer to have consistent profits and a reduced risk, I suggest you follow a proven system. You see, what that does is it makes your investments boring so that your rest of your life can be exciting. Now, I've actually explained my proven system in this DVD. No, it's a system that's been known, proven, trusted, not just by me, but by lots of successful investors, so I really recommend you get it. Lesson number 4. Lesson number 4 is, if you want to get rich quick, you're probably going to get poor quickly. You see, real estate's a long-term investment. Yet some investors chase the fast money. You've probably met people like that. They look for that deal that's going to make them fabulously rich. And when you see them a year or 2 later, you're usually no better off financially and still talking about that next deal, that one that's going to make them rich. They're often influenced by the latest get-rich-quick artist with a great story about how you can join them and become stupendously wealthy. Their stories can be very compelling, even hard to resist. And they often pander to the wishes of people who'd like to give up their day jobs to get involved in property full time. But in reality it takes most people many years to accumulate sufficient assets to get out of the rat race and do property full time. Patience is a virtue. In fact, Warren Buffett said it right when he explained that wealth is the transfer of money from the impatient to the patient. Lesson number 5. It's about property. See, you're in the business of property investment. Yet during the last boom, many investors forgot that age-old property fundamental of buying the best property they could afford in proven locations. Instead, they got sidetracked by glamorous finance or tax strategies. You know what? Some lost out. Smart investors do it differently. They make educated investment decisions based on research, and then they buy a property below its intrinsic value in an area that's always outperformed the long-term averages, and they've bought the sort of, for capital growth, and they've bought the sort of property to which they can add value. They can create some capital growth. These are just 5 of the many lessons that I've learned from the recent property cycles. We already know that in the last year or so, the pendulum has swung too far in some regions, and in some cases the markets are catching their breath, aren't they? We also know that if history repeats itself, some markets are going to swing too far in the negative, driven by fear. So if you learn these lessons from previous cycles, the roller coaster ride won't be as dramatic this time, because you won't let your emotions drive your investment decisions. Because remember, both fear and greed will drive you down the wrong path. Of course, another important lesson is that now, more than ever, you can't just buy any property. You can't just rent it out and wait for capital growth to generate equity. To be a successful investor, you need to buy that right sort of property, the one I said below its intrinsic value and one to which you can add capital growth. Now that's actually not too hard, but you have to have up-to-date information on values and you have to do your research. Buying that property with a twist, something with a level of scarcity. One that you may be able to add some renovations to, or one with a hidden opportunity that others have missed. What this means is that to be a successful investor and to take advantage of the opportunities this changing market will present over the next couple of years, it's very likely you're going to have to do something a bit different to what you've done over the last couple of years. Some readers will definitely need to do different things to protect their current property portfolio. Now, as I've explained, I've actually outlined my approach, the one I'm taking over the next couple of years, in this 2-DVD program that I've called Building Wealth Through Property Investment. It's the strategy I'm suggesting is going to work really well over the next few years. For close to 4 hours, I explain my successful property investment approach. If you want to be prepared for this new era that we're getting into, why don't you click on the link below and get this DVD program, because it comes with 3 free bonus reports and some audios. And if you missed my recent round of seminars, you definitely should get it, because it was taped at the recent round of seminars. Now, of course, I'm going to keep you up to date on how to take advantage of the changes happening in our property markets in our regular fortnightly updates. But it's also probably appropriate to remind you that in changing times like we're experiencing, no one can quite help you like the independent property investment strategists at Metropole. Look, remember, our multi-award winning team have got no properties for sale, so their advice is independent and unbiased. If you want to find out a bit more about what's happening in your local market and what our research suggests in store, join us for a free briefing in Melbourne, Sydney and Brisbane. Just click on the link below and reserve your place. And as so much is happening in our property markets nowadays, I also would like to keep you updated almost every day in my blog. If you just click on the Michael's blog link up there, a menu item, you're going to be able to subscribe to it. Now, that's a different subscription to this fortnightly property update, and it gives you my daily, real short updates. In the meantime, have a great week, make it a great week, and I'll see you in 2 weeks' time.